Hi there, theorists. This is Neil here again, and welcome to February 27th, 2020's edition of the Cherry Bomb trade here at Option Theory. So in this episode, of course, we are going to go over the Cherry Bomb trade that comes from Tasty Trade's email blast. So you should definitely go to tastytrade.com, sign up for that. I'll put it in the description, the link to that sign up. It's not an affiliate link or anything. Just sign up, or don't. But if you want to, that'd be great, because then you can get those emails too. You can do those trades. And I record these videos obviously really early in the morning, but because really the email is Tasty Trades, I don't publish it. I schedule it till be at the open of the market. So that way, if you want the advantage of being able to set up the trade and analyze it ahead of time, you want to go and get their email blast, because, hey, they take the time to make those emails. I just put them on and encourage you to trade with me so that you can get the practice of driving the car and seeing how to push the buttons and learning, because that's what we're here for, right? Learning, testing the system, testing the theory. So with that said, I'm going to switch over to my platform. All right, so here we are. We're in my computer. We're looking at our Thinkorswim platform, simulated trading, of course. And we can actually see that if you've been following along, we finally have a position, right? We got a position in the Qs. If you remember, yesterday was an iron condor. And we can see here that it's showing a 0 P&L. Okay, that's great. Iron condors do not benefit from a move in the underlying. We'll take a look at the risk graph again. But on my screen over here, I have today's Cherry Bomb pulled up. And brace yourself, it's another $2 wide iron condor. Different underlying this time, though, right? So one of the Tasty Trade approaches is certain strategies are good in certain environments, and because of the market sell-off, correction, whatever you want to call it, IV is definitely, implied volatility is elevated, and so certain strategies are great for that. You want to sell premium during high IV times, right? You want to be the person that writes options. And right now in this Cherry Bomb, we see that we're going to take the Qs off. We're going to go to EWW. All right. So, and it always helps if you want to actually go to the right tool. So there is, we're in the charts, not the analyze. So there's EWW. We can see that it as well has had quite a bit of down experience going on compared to its recent times. So rather than taking a directional move saying, okay, it's going to be going up, or say it's going to be continuing to go down, we're going to go with a neutral bias, saying it'll stay within a range. I like to think of those as like field goal posts in American football, right? How wide are we going to set those to be able to hit our goal? Okay, so back to the Analyze tab. Click on Add Simulated Trades. And with this one, this Cherry Bomb here, once again, my own analysis, whatever, there must be a reason. Maybe if you know, you can explain it in the comments below. But they're choosing these weeklies with 29 days left. It seems that they almost always go for the options that are closest to 45 days, like in the Tasty Trade approach. So with that said, we know we're going to be in the March 27th, the weeklies. So we're going to twirl that open. And the Cherry Bomb says that on the low end, we're going to go short the 42 put. All right, so I have 50 strikes from yesterday's video, which if you didn't catch that, I'll link to that above there. All right, so check out that card if you want to go see yesterday's. You can still put that on. I think it's the same value as yesterday. So there's the 42. It's 65 cents. So if I right click that, okay, choose Analyze Sell Trade and choose Iron Condor, it's going to put down an iron condor for me to begin tweaking. And so here on the put side, we're doing a 42, and we're doing we said it's a $2 wide. So that means the long, what I'll call my reinsurance protection, right? Because this is a defined risk trade, is going to be 40. Okay, so there we have the put side taken care of. And just so you can see the wonky little risk profile there, that's not what we're going for. We want to even this out. So we're going to go back here, and we're going to put on a short 46.5. So find the short one. That's the negative. We're in calls. That's the negative one. We're selling this call, and we said 46.5. Okay, and of course, if it's a $2 wide, we're going to go up to 48.5 for our long call. So that's a credit of 62 cents, pretty close to yesterday's with the Qs. Let's take a look at the risk profile, and we'll set it to expiration here for, we said, March 27th. Okay, we'll set our price slices to break even at expiration, and we can see that there's roughly a 60% chance, right, that the underlying will land between these two marks at expiration. So we'll say that a 60% chance of probability of profit. Okay, we can see that we have a little more risk to the downside because it's not quite centered, right? It would be centered if it were here. So the other thing I want to call your attention to, obviously this turquoise line may or may not be obvious. This turquoise line is the risk profile at expiration, while this is what it is today, right? So you can see that if we open to the trade here, there's some wiggle room to the right, but we begin losing as we move to the right and losing as we move to the left. Just as a recap, those iron condors are all about theta. They're all about time value. We would love it if every time you put on an iron condor, it just stopped moving. Right? It just stayed put. Of course, that's not going to happen, but as time moves on, right, time is working for you when you sell options, and that's just an awesome thing that you don't get when you trade shares, right? Just, I'm buying this or whatever, right? So here is something else you might find interesting. You can actually see how this purple line changes over time, all right, by clicking on these plus or minuses, and you'll notice that as we march closer towards expiration, that purple line is going to start to hug, right, that turquoise line, the expiration one. So keep on going. And of course, you can see your probabilities. So if it were here on March 15th, okay, there'd be an 80% chance, 80% probability of profit, right? So of course, as time gets closer to expiration, and it doesn't move, those probabilities would be getting better. But I want to go back to today's probability. So I click on the calendar, click on go to today, right? And so once again, following the tasty trade approach, we want to get approximately 1/3 credit. That's 1/3 the width of the strikes. It's $2 wide strikes between our call spread and our short put spread. And while it's not perfect, it's really close to perfect. We're going to route this one to be filled and keep track of that. So I'm going to right click this position down here and choose confirm and send. And we can see that our credit, it would be 62 cents or times 100 because option contracts are worth 100 shares, right? So multiply your cents by 100, $62, $138 of maximum risk should it go all the way up or all the way down, because on an iron condor, you can't lose to both sides. There's only one side you can lose to, right? So with that said, I'm going to hit send, right? And that is going to be over here in our working orders, and I've got my Thinkorswim app on my phone because I'll leave here shortly. I'll head to work and I'll hear the little ding when it fills. If not, hopefully at lunch I can check to see what happened in case there's any sort of gaps. But that was the cherry bomb for today for February 27th, 2020. I hope you found this helpful. I hope you get to trading along with me. And I look forward to seeing... Oh, hang on a second. I'm not done yet. Yesterday, I talked about keeping a log. So here is my... my journal, if you would. So let's take yesterday's trade. See here, I have, it was what symbol, the date, whether or not it was an open and closing trade, what the IV rank is. And now that IV rank comes from when you get the cherry bomb. It's a great tool. You don't have access to IV rank inside of simulated trading. So there's two ways you could go about doing that. You could actually open up a funded, an actual TD Ameritrade account. You don't even have to actually fund it. So open a real one. They will close it after a while if you don't put any money in it. But the other thing is you can create a Tastyworks account. Love Tastyworks. It's where I do my real trades. But they don't have paper trading. So that's why we're using Thinkorswim. But it's really good to be able to drive more than one car. Anyway, I digress. So these were the initial probabilities, and that's our fill price, what the strategy is. We know that this is a neutral strategy. So let's put in today's trade. I'm going to drag this down because it's today's date, and we did EWW. It's an opening trade. And the IV rank for this one, does it say it in here? Yep, 96, right? 96%. And it didn't fill yet, so I save this to sell. I don't fill it in until it actually fills. And we said the probability of profit was 60% again. That should be a percent, not 6,000%. That's a little crazy. Boy, it's giving me grief, huh? I don't want that many decimal points. Thank you. All right, and it is once again an iron condor, so I'm going to copy that and paste it down there. Excellent. Another thing you get in the cherry bomb is it tells you that there is a 69% probability of making 50% of your profit. And that's one of the things that you get if you have a Tastyworks account is you'll get what they call the P50. And one of the things with Tastyworks, Tasty Trade, is that their approach involves taking your winners, right? That's what I love about them. They're counter to what you normally hear. They say, cut your losers short and let your winners run. Well, not Tasty Trade. All right. They basically cut their winners short. Improves your probability of profit dramatically. So with the Iron Condor, the profit target is when you make 50% of that credit, it's time to cut it, right? Time to take it and run. So anyway, this is the journal. You can create something very similar. And of course, you can manage your trades as you see fit. But because I'm testing the Tasty Trade approach, testing that theory, I'm going to stick to their approach and their targets. So that is it. I'll wrap it up now. I hope you enjoyed this, and I can't wait to see you again tomorrow.